The term IPO is familiar to many investors and beyond investors. Initial public offerings of companies on the stock exchange became really popular in the last couple of years, when almost any stock offering brought tens and sometimes hundreds of % of profit on the first day of trading. With an IPO, everything is clear. This is a fairly well-known investment tool. But what about pre-IPO? Less people know about it, but this is a way of investing with potentially even higher returns than an IPO. Let's show with examples. Shares of IT company Snowflake, which could be bought at the pre-IPO for $15 to $20, rose to $250 on the first day of trading on the stock exchange. As early as 4 months later, these shares rose to $429 apiece. This is not an isolated case. For example, DoorDash shares, which could be bought at the pre-IPO for about $50, cost $182 a share at the IPO. The very next month, the price reached $256 per share. Pre-IPO is an investment in private companies before they go public. These are real venture capital investments. Direct purchase of the company's securities before its listing on the stock exchange. Pre-IPO are not garage startups. These are already established companies that have already successfully completed several rounds of financing and are already approaching their entry into the stock exchange. Right now, some of the most interesting pre-IPO companies are SpaceX, Revolut, Clubhouse, and many other big names. What are the benefits of investing in a pre-IPO? Low competition. Many investors simply do not know how to invest on the OTC, so-called over-the-counter market. Even before, this tool was available only to investors with large capital. Potentially very high returns. Modern technologies make pre-IPO available to a wide range of investors. Real venture capital investments are now available to investors and traders through popular brokers. Now you can also take part in stock trading at the pre-IPO stage. You do not need large capital for investment. Access to a large number of pre-IPO companies. In a convenient and familiar terminal. Transactions can be conducted in a platform familiar to many traders like popular MetaTrader 5. In fact, you don't even have to wait for an IPO to multiply the capital invested in the shares of a private company. Prior to the IPO, the business also raises additional money through so-called investment rounds. The company is developing step by step. At each round, new venture investors are added, which means that the price of the company capitalization increases. A food delivery service, Glovo, raised $450 million during its last round of investment. Before that, the company was valued at about $455 million. Capitalization doubled in just one round of investments. This means that the price of each individual share also doubled. Large and more well-known companies such as SpaceX hold such rounds worth hundreds of millions of dollars several times a year. When you invest in a private company, you partially own it. Each additional inflow of capital brings profit, including to you, due to the reevaluation of the value of the company, and hence your share. Modern technologies make private traders one step closer to professional investments. Try investing in shares of pre-IPO companies. Become a part of the world of venture investments, the most advanced area of financial markets. Check the availability of IPO and pre-IPO instruments on your broker's platform.